Hi, Norman.
Hi, Vanush.
So, welcome back to Island Paradise. And I believe this is the third occasion you actually came to Sri Lanka in the last couple of years. And you traveling around the world and coming to Sri Lanka, specifically in terms of credit card space. What do you feel the major differences are when you compare to other parts of Asia and the Western world, plus in Sri Lanka? What can you share with us?
So this is actually the third trip this year already. Sri Lanka's going through a period of real digital change in terms of its card issuing space. I think when we look back, I've had 35 years in the card payments space. And really for about 25 of those years, it was very much dominated by a physical card type of environment. So my bank traditionally issued me a plastic card that I would use at an ATM. And then when I was a little bit older and I could afford a credit history, I would then be issued a credit card. And for 25 of those years, all I ever did was I used plastic when I was paying. And really what's happened in the last 10 years, and it's accelerated, is that people have started to use their mobile phone. And the mobile phone as a form factor is now dominating the conversation, particularly if you're a younger person, particularly amongst the more professional groups, the female groups. The desire to not carry around a purse or a wallet or cards has accelerated. More people feel comfortable using their phone and they're wanting to go around and pay with their phone. Now, in order to enable that to happen, the phone has to allow something called tokenization. And that's essentially where your physical card is created as a secure token in the phone so that it can then be used. And back last year, the Central Bank of Sri Lanka gave the regulatory clearance for the Google Pay wallet to be used. And this is normally when a wallet comes into a market, we see an acceleration of interest. So to date, there's nearly 100 countries around the world that have regulated and allowed wallets to come into the market. And that, as I mentioned earlier, really accelerates the way that people want to use the phone in order to make payments. We're going to see a world where probably in several years' time, people won't even have physical cards being issued. Everything will exist as a digital token or a digital identity that rests within your mobile device.
So thank you so much, Norman. What actually, I believe, would drive this transformation? For example, now if you really look at advanced countries like the UK or the US, for that matter, and then you compare certain countries like India, right? From an economic standpoint, not as advanced as Western world, but adapting to the digital form of payment, it has been massive, right? So what actually has driven a country like India to sort of adopt more of a digital payments environment compared to an advanced country? And why has that been the case?
So the quick answer is, again, the mobile phone. Many people today have the mobile phone. They're incredibly comfortable with using that. And just generally in people's busy lives, they don't want to go back to having to walk into a branch, stand to have self-service. Now they want to be able to go into their mobile banking app. And if they have a problem, like they need to increase their spend limit, they want to be able to do that within the app and to do self-service management. So technology and the phone has allowed this to take place. I think what differentiates is the consumer experience. So what we're seeing around the world is we're seeing really great examples of mobile banking apps, and some of the most advanced are not necessarily in Europe or America. You can actually find those in countries like Cambodia. We're also finding that virtual card issuance has been a real level playing field. So where once upon a time, you might have expected decades of difference between a mature market to more of an emerging market launching a card product, Now virtual cards are being issued in huge volume in so many different places. So if I take a look at East Africa, where I travel quite frequently, there the largest issuers of cards are not banks anymore. They're telcos. And the telcos have all launched virtual cards. Some of the most defining changes that's causing competition in the mature markets like Europe have actually been brought by digital banks. So brands like Wise, Monzo, Revolut, Modular, all of these organizations are offering, typically to start with, a virtual card product. And unlike a traditional bank, if you want a physical card, you would actually pay in order to get a physical card and then get that delivered to you as well. So a lot of these digital banks are changing the economics, but the common leveler is that these virtual cards are being issued all over the world now. And of course, the virtual card can very easily sit within a mobile device as well.
Also, Norman, what I really like to do is you spoke about countries adopting more of digital payments and how it has trickled down to banks, right? So what actually will make a country like Sri Lanka move at a pace to adopt the digital payments, the soft tokens? I mean, basically not use this plastic.
Yeah.
What would it take?
So it's a great question. And really, it's two things. You need the regulator to be proactive in driving an open regulatory framework that encourages digital payments and therefore innovation, and fintechs are quite often an early innovator around that. So if you have an open regulatory framework that encourages that competition and that innovation, but you also need a society that is adopting smartphones and usage of smartphones. And as I was saying before, today in every nation of the world, you'll find very high smartphone adoption rates. So that second one's been addressed. The Sri Lankan central bank's already addressing the first one by opening up and allowing people to use a third-party wallet, for now the Google Wallet. But we can expect to see over the next years Samsung wallets coming in, Apple Pay wallets coming in, and this will just increase the number of device types that people can use. There are cards effectively tokenized on the phone. Thank you.
What support does the card schemes actually, how do they collaborate and help your journey?
The Stanchion journey, or the bank's journey?
The bank's journey.
So the schemes are obviously trying to get everybody to go digital. Again, several reasons. First, customers are demanding that. The customer wants to do things on their phone. But actually, fraud is growing. So we're seeing an environment where consumer behaviors have changed quite rapidly. There's been a rapid growth of e-commerce transactions. So in Sri Lanka, you still have very high volumes of physical transactions that take place. That world is being serviced increasingly by QR codes as a payment method, which has actually got nothing to do with cards whatsoever. But the QR code payment is eating into traditional debit card product lines. So now the QR is an account to account transfer, and normally a debit card would have hung off that same current account, but just allowing cash withdrawals. In the credit space, the credit card has still got a strong role to play, but we're seeing an increased amount of niche or segmentation offerings coming in. So we're seeing organizations trying to launch premium travel products. They're trying to launch currency products. They're trying to launch fuel card issuing products. And so that range of segmentation is something that banks are trying to adopt. And again, that credit card product is one that's increasingly moving digital. The problem where a credit card transaction is used, then in today's world, it's actually quite easy with phishing and cybersecurity attacks for somebody to be able to harvest the data. And once that's done, that data is effectively sold on the dark web for very low amounts of money, and a fraudster can use that and very rapidly use the card. So there's quite a lot of innovation taking place at a scheme level to get rid of that fraud. And examples of that, again, rely on tokenized cards. So click to pay is a term which we're going to see being adopted, particularly in 2027 and onwards in Sri Lanka. And what click to pay does is it allows a customer that wants to shop for e-commerce to be able to do a one-click checkout, because the issuing bank has already uploaded into a secure scheme vault the necessary data that normally a cardholder would enter when they're shopping on a merchant site to do checkout. So a customer won't have to enter that data anymore. They'll just see an icon and they can press that icon and do a one-click checkout. Another form of fraud mitigation is to be able to move away from the fact that if somebody has stolen the card credentials, we can do what's called a dynamic CVV2. So the 3 digits that are on the back of a card, if they're stolen, they're always in existence. But if you change that so that those 3 digits are dynamically produced when there's an e-commerce transaction and the customer picks that up from a mobile banking app, there's now a second factor of authentication needed, and it would be almost impossible for a fraudster to have access to both at the same time. So that can be a very quick way of eradicating fraud. And these trends, the customer experience, the segmentation, and the fraud are ones that we're seeing rapidly adopting. And as I said earlier, we're not seeing around the world, we're seeing countries adopt at almost a near level playing field.
Thank you, Norman. So, I mean, and I really appreciate the content that you're bringing to the table. So, my question is also, I'm sure you and I grew into this industry. The banks use multiple schemes, incentive schemes, to encourage customers to adopt internet banking.
Correct.
In its crude sense, right?
Yeah.
And it was more like if it was a commission was 20 rupees, they would say, okay, if you do internet banking, it would be free, right? So likewise, what you're going to do is complete transformation, it's disruption. So how would you actually believe that, what initiatives do commercial banks need to now take? Launching Apple Pay, launching Google Pay is one part of it. But how would you encourage the customers to actually start getting them used or increasing spend on it?
Yeah, so it's a great question. So in East Africa, for example, where the mobile telcos have become, by a long way, the market leader in terms of the volume of virtual cards that have been issued, banks have attempted to catch up. And now banks are feeding back that they're struggling to get usage or frequency of usage against the virtual card. Now, the challenge so the benefit of a virtual card is that you no longer need to produce a physical piece of plastic. You no longer need to work out how to get that delivered. A virtual card can be opened and created almost instantaneously. And you're going to save at least $7 from that physical card sense. So suddenly, you're making the cost economics work out. The challenge is that if a customer only ever uses that virtual card once, you're still paying some fees to the scheme that is essentially an annual fee. So it is really vital to be able to get that utilization. So the way that you can go about improving that utilization is just to go back to basic human behavior. So what banks will have is they'll have the mobile phone number of the customer. They'll have probably a mobile banking app, or if not, they'll at least have a USSD method of reaching out and communicating to a customer. And depending on the sensitivity of the data of what they want to try and do, if they send out notifications to the customer after they've seen an event. So for example, they may have noticed that a customer has gone back to spend with a physical card. And they could say, by the way, do you know that you could have used your virtual card to do that? They may notice a trend where the customer is effectively only using a virtual card once. And so they could remind the customer that they can keep using that virtual card. This is called nudging, and the behavioral nudging will start to shape behaviors. So again, we offer a notification capability that would allow a bank to offer capability like that through the platform of choice for the customer, whether that be a WhatsApp channel or whether that be the mobile bank app channel. And the bank could customize what it wants to do through that particular notification channel.
Thank you. You spoke about regulation in terms of central bank, the regulatory authority, but at the same time, do you feel that mechanism that a society becomes cashless is only via regulation, or is there any other human behavior that has to come within the whole ecosystem other than the regulation piece?
So most markets, regulation exists. And if regulation doesn't support something that's open, you're not going to see any form of innovation. So unfortunately, the two things do exist. But where you have a more open form of regulation, you will find that customers are the ones that actually define what's going on and what they want. I mean, for this reason, if you take an organization like Revolut, it's now become the largest digital bank in the world. Yeah. They've grown incredibly quickly in a decade, and they're adding more than 1 million new customers every 17 days. Yes. So the customers are actually choosing. And in many cases today, there are countries where the leading banks who've been around for decades are actually now sharing their customer base with a digital bank.
Thank you, Norman. So, and I think the last couple of months since Enable and we started partnering each other, we've done a lot of good work where we have gone to banks, done lots of demonstrations, POCs, and we are really sort of going through this journey of collaborating to get these digital payments, the whole ecosystem into the industry. How do you see Stanchion partnering with Enable, and also just not partnering, but how do we really contribute to the whole economy and the regulation, and how can we become an integral part of this whole journey?
So I think a key challenge that many banks have got is a lack of experience or a lack of deep skills. Stanchion's an organization that's been around for 25 years. We've done more than 30 projects around the world in this digital space. And these are markets that are just more naturally further up the adoption curve than Sri Lanka. Sri Lanka's adopting fast, and we can bring those skills into market. But it always requires a local partner that has strong knowledge of the banking and finance ecosystem, strong local partnerships. So we always work with an integration partner, and Enable is our partner here in Sri Lanka to do that. So really, we're bringing that global twinned with that local expertise. The products that we've built in our solution that we call Payment Fabric essentially allows a bank to get started without replacing what they have today. So many banks are faced with a prospect of either having to replace platforms they've got or potentially outsource. But there is another option. And the other option is to effectively wrap or overlay what they have today, protect the existing system, and then just buy business logic or product logic that enables capability. That still needs to be deeply integrated. And what our Payment Fabric does is it essentially provides an API to a lot of legacy card management systems. And it provides a common API at the front end for these incredibly busy mobile bank app development teams to consume. So what they don't want to do is constantly have to change the mobile banking app, and they don't want to do that across different products. So we provide a common card-based API at the front end, and then we take care of the complexity of working with what can sometimes be several different card management systems. We have a leading bank in Oman that's a customer, and they actually have 3 different card management systems from 3 different vendors. So the customer needs a common experience, but they've got 3 different platforms they need to manage, and they've got multiple card schemes that they're working with. And so what our payment fabric does is it takes care of all that complexity by acting as an overlay.
So from a layman's perspective, what it basically says is you don't have to have a state-of-the-art card platform as a bank. And the proposition or the service that you can bring into the table is that, again, in very layman's terms, the soft tokens, the digital payments, all what you talk about, it's CVV, the dynamic CVV, all this can be done without actually upgrading your core infrastructure. You have the capability to manage wrapping it around, as you were said it, and get it out in the market, which is a much quicker way. So that also, I believe, brings your proposition which must speed into the market. That's what you're saying, right?
That's correct. If you take the executive within a bank today, probably the one thing that you know that is true is that data is becoming a richer and richer source, and that you need to work out how to launch products more quickly that have a lot of data-driven insight from them. But you're in an environment where you've got a lot of legacy tech. You're not entirely sure where consumer behavior is going to go in terms of the adoption of QR codes and what that might do to traditional current account banking. You're possibly not too sure where things are going to go from a credit card and commercial card perspective. And so in that vacuum, you need to be able to protect what you have today, to be able to very rapidly launch new products that you have the control over rather than the vendor have control over, because we've got AI developing at an incredible pace. We know that agentic commerce, which has already been successfully trialed here at the end of March by MasterCard in Sri Lanka, is coming. We know that in 3 years' time, we'll probably see large corporations having budget to buy quantum computers. So there's a huge game changer in a relatively short period of time that's coming down. And within all of that, do you want to be replacing your card management system, which is so deeply embedded into your entire ecosystem? Why not extend it? Give the modernization that's needed with a modern overlay to it, but keep and retain everything that you've got, and then work out how you're going to provide that hyper-personalized experience based on the data that you've got within your organization.
Least amount of amendments coming into your own system, right?
Absolutely. And to try and take some friction points out of the operational inefficiency as well. So, as technology comes along, one of the things we need to be looking at is how do we make the whole process more operationally efficient for banks as well. And I think the way that you can increasingly use APIs will help a bank achieve those goals.
So when you say friction, is the PIN management process you consider as friction?
So PIN management is very often a big friction. In fact, it's quite interesting. There are many parts of the world where they decided that they wanted to be able to no longer have a customer go to a branch to pick up a new PIN, or to send it out in the post if the postal network was good. So several years ago, they allowed for SMS to be used as an OTP. Today, we're seeing almost every central bank around the world mandates in place where you cannot use SMS as an OTP delivery method anymore, because an SMS is by its very nature a store and forward process. And it's incredibly easy to essentially do a man in the middle attack, spoof it, and therefore get access to the data. So we're seeing central banks also rapidly change the way they're doing it. And so PIN management is a big friction point. Where banks get this right, they can actually start to even rationalize the branch network, because in many countries, the volume of people going into a branch to ask for a PIN reset or help with their PIN is very high. And unfortunately for a bank, that's a service concept. Your tellers are not selling loan products or insurance products, which are far higher margin than trying to do a service reset.
Thank you, Norman. Thank you so much. I believe actually we are running out of time at the moment. What can I say? Enjoy our beautiful country.
Thank you.
And I look forward to the next couple of days. We have a couple of sessions coming up with some top C-level executives. And I wish you all the very best. And let's take one step at a time.
Thank you very much. We're also very excited to be working with Enable. Our first impressions and the relationship's only really about 7 or 8 months old right now, but we've been really struck by the professionalism that Enable brings to the way they execute their projects. So for us, it's been a very happy partner to have discovered, and we're delighted to be working with you in the local market.
Thank you, Norman.